What do I do? How do I match my debt with my asset cash flows? That's all we do. It's not complicated. If you're trying to be more complicated than that, we're not smart enough to do it at our shop.
Welcome everyone to The Landscape. This is George Smith's Partners podcast. Today, I'm very excited to host Rob Finlay. Rob is the CEO of 30 Capital and Defease with Ease. And Rob is an industry veteran. He's been in the real estate business for a long time, with a very successful career. Very glad to have him today. And before we get started with Rob, just a reminder, if you want to sign up for our newsletter, FinFacts, just go to gspartners.com/FinFacts, and you can sign up there and get weekly newsletter and also these podcasts and other things that we're producing. So without further ado, I'd like to introduce Rob Finlay. Rob, do you want to give us a little bit about your background and some of the high points of your career and kind of what you're doing in the intersection of technology and commercial real estate? And then we can dive into some questions here today.
Yeah, sure. Thanks. First of all, Evan, thank you so much for having me. Thank you, George Smith Partners. It's an honor to be out here. So thank you first and foremost for that. Yeah, sure. So Rob Finlay, I've been around for a long time. I actually grew up in commercial real estate. My dad was a broker. Grandfather was in commercial real estate management. So, basically from the time I could walk until now, it's all been some aspect of commercial real estate. I'm probably best known for either, depending on what industry you're in, but if you're ever had securitized debt, I'm probably most popular or most famous for, I'm the founder of Defease with Ease. So back actually 25 years ago this month, I was a young 29-year-old kid, and I said, "Hey, I can figure out this defeasance stuff," and hung a shingle up and said, "Hey, I'm Defease with Ease," even though I had no idea about defeasance, and quite frankly, nobody did, because we basically did the first defeasance and second one technically, but from then on, we've really become the trusted source of defeasance. But went from that to in the affordable housing space. A lot of people know me from, I created a company called TCAM, which is Tax Credit Asset Management. We started back in about 2008, 2009, and we became one of the largest independent asset managers of affordable housing in the country. I ended up selling that company actually to MRI, the real estate technology and services company, the public company. Or if you're a syndicator and we're familiar with trying to raise money back and when the Jobs Act first started out, I was the guy who started a company called Full Capital Stack and IMS, Investor Management Services, which later sold to RealPage. But that really streamlined your operations of raising money and managing investors. So depending on which side, or if you're a trader in CMBS, had a company called Trader Tool, which we managed, helped investors make smart decisions on loss severity and loss timing on their CMBS pool. So, basically for the past 25 years, I've really been providing services that really would help, or technology or solutions that really help commercial real estate owners maximize their properties and their returns.
Yeah, no, that's amazing. I mean, obviously an illustrative career with a number of exits to public companies and whatnot, and sitting at the intersection of real estate and technology for such a long time. So having done that, Rob, like, what do you think about what's happening today in this world with the advent of generative AI and just the pace of the ability to deploy tools? And give us, like, what's your gut on all of this? What do you think about it?
Well, I think we've been incredibly fortunate to live in these areas where we have probably two of the greatest technological impacts in our history.
Right.
First one is obviously AI. I think AI is incredibly powerful. The second one is from health, is this GLP-1, right? So the stuff that's getting people skinny. I think these are two unbelievable technologies that we're witnessing right now. On the generative AI stuff, it'll be incredibly powerful and impactful for those who take advantage of it. And I think it comes down to commercial real estate historically, and I know this is sort of beating a drum and saying things that people already have heard, but commercial real estate, we don't really like to embrace technology. We say we do, but we really don't, right? Data and analytics and business intelligence and all this other stuff really doesn't exist. It exists in commercial real estate, but very few people actually take advantage of it.
That's right.
And so I think personally, I think there's still a big divide in commercial real estate where in order to really create alpha and really create outsized returns in real estate, you have to look at how the asset performs, but also debt. And I think obviously you and I have had this discussion before, and obviously because of your industry and your expertise in your industry, very few real estate companies that we've been involved with really embrace that, right? They like to set their debt and forget it. And we are much more believers in actively managing and actively optimizing your debt. Basically going to the well, I don't care what rates are. I can somewhat forecast where rates are and I can somewhat forecast where my property is going to be. But quite frankly, putting them together to optimize my debt and my return is something that isn't normally done.
Got it. So specifically though, with 30 Capital, um, walk us through how you engage with the client on the debt management side, and what does your technology, what insights does your technology deliver to the clients that maybe they couldn't get without leveraging that technology?
Sure. So I think, quite frankly, technology is only useful if it's levered and used properly, right? I wish I've had true SaaS companies where people just buy the software and that's it. That doesn't really work for us. And I think where we've been very successful is we use technology to connect our goods and our services with our customers. It's just basically a way to, it's a way to communicate. It's a way to engage. And so typically people come to us, and it first started 25 years ago where people would look at it and say, wait a second, I've got a defeasance premium of this. I've got to pay $1 million to get out of this loan. Why in the world would I do this? And so we would start to then ask them, okay, well, send us a pro forma of where you think your property is going to go. And then we'll match our forward curve and we'll do all this scenario stuff. Like we just spent so much time being Excel jockeys and just sort of doing this. It's like,
Sure.
there's got to be a smarter way. So the way that we use our technology now is we basically have taken all of our internal tools. This is debt optimization, interest rate forecasting tools, pretty advanced capital markets software, and we tied it into a way for us to get somebody's pro forma. So we hook up into their properties, their property management systems. We can get their actuals, we get their budgets, and we add on pro formas. And then all we do is we say, hey guys, let's take a look at all your debt. Let's match out your maturities. Let's really make sure that we're optimizing it in the best way. So our technology is really just a way to connect us with our customers to make it easy. Because nobody
Sure.
wants to redo pro formas every month or so.
Right. Right. And it also allows the client to be a little bit more data driven in their decision making, right? So, kind of stressing the importance of using data and analytics so that you can respond to the market dynamics that are happening. I mean, obviously you've been in a somewhat volatile commercial real estate market for the last few years. Stepping aside from the technology discussion for just a minute, like what do you see as the biggest? I presume that most of your customers are multifamily borrowers. Would that be correct, or is it all over the map?
I think it's all over the map. It's we're very fortunate, right? So for every multifamily, there's mobile home parks, there's self storage.
Sure.
Their office was a big component of our business, but no longer. But we have a broad range. But yes, in the last few
So,
years, I think the multifamily has probably been a larger component of our customer base.
got it. Well, yeah, either way though, let's talk about the real estate market in general. Um, obviously the real estate market at some level is just a huge play on interest rates, right? And so we've been in this hopium cycle now for quite a long time. Um, you know, I don't want to I don't want you to have to give me a prediction here, but like where do you think the market is at with respect to sort of buyers and sellers and finding um a price discovery in the market, given that long-term rates are pretty high and they don't really seem to be coming down. And there's some potential inflationary pressure that people are talking about. We may not get the short-term rate cuts that people were hoping for. It seems like we're supposed to get a whole bunch of rate cuts, then we got a little bit on the short term, but then the long-term rates bounce right back up. So tell us a little bit about what you're thinking about there, because I know you also own a large portfolio of real estate,
Mhm.
personally as well, and you have all this data that you're sitting on. Let's just dive into that a little bit. What do you
Yeah.
think is going on here?
So I think there's, yeah, it's a big question, right? Sort of
Huge
loaded, but
question.
let me try to break it down a couple ways. One, rates are only just one equation, right?
Sure.
So in the market right now, we're also dealing, especially in the multifamily, um, oversupply, right? So you've got all these properties coming in. So you've got these headwinds, right? And now matching insurance. So, right.
Sure.
I mean, boo-hoo, woe is me, real estate market is horrible. But at the same point, we're still doing refinancings. We're in two refinancings right now in our portfolio. We constantly look to harvest and pull equity out because we're matching the way that we look at this, and this has been fundamental to our business and to our success. We don't look at short term. We don't try to predict forward rates. We can sort of look at forward rates, but I can tell you historically, if you look at a forward curve, it's wrong, right? The market always gets it wrong. So you have to look at it yourself and make some educated guesses. So we do analysis. We believe in risk adjusted returns. I look at my properties and I say, over the next 3 years, based upon the supply that's coming in, where do I look at my cash flow? And that's it. That's all I look at. Now with that 3 year horizon, because I think I've got some pretty good visibility on that 3 year horizon, based upon a best case, a worst case, and a base case. Where do I think interest rates are going? Okay, well, they go this way, this way, this way. What do I do? How do I match my debt with my asset cash flows? That's all we do. It's not complicated. If you're trying to be more complicated than that, we're not smart enough to do it at our shop. But if you say, yes, that makes sense, I can sort of have some understanding of where the market's going to be, interest rates, what my property's going to be, match them and see what you've got. Hey, it could be a 5 year IO deal, which is really popular right now, even if I'm paying a higher coupon than I was before, because I can pull out $5 million, 6 million, $10 million, and that use of capital is this. Or we
Right.
have clients who are going from an interest only period to an amortizing period. Well, that hurts. That hurts my cash flow, and I've got to have these preferred return obligations. How do I cover those? Well, maybe it's pulling out cash, accelerating your promote so that you can pay off your preferred return, right? So it's all about the strategy. So rates for the next 12 months, I don't think we're getting any major cuts. I don't think we're going to get any major breaks. And in fact, we're seeing anomalies in the market that we've never seen before, which is typically the market, 10 year will actually follow this short curve when it's dropped, but it's not. So we're seeing a lot of things, and then you got tariffs and elections, all this other political crap that I don't know about either. So we try to boil it down to, if I can pull money out today, here's what it's going to cost me.
Sure.
What's my opportunity cost? What's my true cost? That's it. Make it easy.
Right. No, I totally agree with you. I think in our business, we've seen this sort of just, I'm going to wait, I'm going to wait, I'm going to wait. We might be waiting for a long time because it doesn't seem like long rates are going to come down, since to some extent they're a function of, you know, things that are so far beyond your control as an owner of real estate and an investor. Um, so, so, again, like let's circle back to the technology side of things. How are you, like, give us your top prediction or two on how AI is going to disrupt or impact commercial real estate. Obviously, it allows us to access like larger corpus of data more efficiently, et cetera. But, is there anything you're doing at 30 Capital to lean in on AI, or is that just something you're looking at?
No, we definitely use AI, but we use AI to simplify our life, right? I mean, the
Sure.
AI models, but let's be realistic, folks. You're not going to do anything, if you're a real estate shop, you're not going to do anything special with AI that Google or these large companies.
Right. That they can't do. Right.
Right. So use AI to your advantage, which is to make yourself efficient. I mean,
Sure.
use AI to respond to the 100 emails that you get a day. Use
Exactly.
AI to help you build a template for a walkthrough. Use AI to help you with some. Where we use AI, quite frankly, is to make my life easier. I live off my cell phone. I walk on a
Totally.
property. Hey, give me my comps in this market. Hey, what are the 4 questions I need to ask my property manager when I walk this property? That's what we're using it for. It's just taking data. All we do is we built a business intelligence tool. So we take data from companies and our own and from our customers. And we take all of their property level information, we throw it into a database. And before we would let them build charts and graphs, and that was great. It was called the business intelligence tool, and it's our
Sure.
product called Lobby. Well, that's great if you're sitting at a desk and you have a chance to build a report and all this stuff. But at the end of the day, you're taking this report, you're visualizing it, somebody's taking the report and consuming it, and they're going to go out on the road and they're going to look at it. And we just use AI to make it easier for the way that we consume data. And that's it. So I think
That
AI.
makes sense. Yeah, yeah. So how do you measure success at 30 Capital? Like what's your objective? Where are you trying to grow over the next, 5 to 10 years? Um, love to hear about that and kind
Sure.
of understand where you're trying to go.
So I think we take an approach. So we believe in OKRs, where objectives and key results. So that's a big thing. And I think I think I dedicated like two chapters in my book just on
Yep.
OKRs because it's so critical to a company. Our OKRs are fairly simple, right? It's one, make sure that everybody in the company knows exactly what we're doing and the path that we're going. And this is critical for not just us, but for any organization out there, right? I mean, you've got organizations who were actively doing acquisitions and now we're more in asset management mode. Well, does everybody in your organization know what you do, where you're going? So that's the number one thing. That's our number one objective. Key result is making sure everybody in our organization, 100 and something employees, know exactly what we do, where we're going. Second one is to make sure that our customers know what we do and what we stand for and what we provide for them, right? It's very hard
Sure.
when we're pretty much known as defease with ease. Well, yeah, well, defeasance is one aspect of what we do, right?
Sure.
We do so many other things. And so making sure that our customers know exactly what we're doing. And then
Right.
finally, it's our third one, and our third pillar is execution excellence. I think we are a service business. That's it, pure and simple. You know it better than anybody else, Evan. If our customers aren't happy,
Oh yeah.
you might as well find something else to do. And that also comes down to knowing who our customer is, right? We have multiple customers. We have tenants who are our customers. We have investors who are our customers. We have clients who are our customers. So making sure that we are operationally excellent. Everything that we do, the people that we have, the services that we provide, we need to make sure that they are excellent.
So in other words, if you can understand who your customer is on a more deep level, you can kind of tailor your services to that customer persona and then build a longer term relationship, kind of owning them longer through your value cycle that you guys have with 30 Capital. In other words, you're not just there for defeasance, you're building a long-term relationship. So hey, back to OKRs just really quickly. How do you specifically, I think, how do you I mean, I'm very familiar with the OKR framework. I know that, many very successful companies have used this, but how do you guys at 30 Capital communicate those OKRs across the organization? I mean, you kind of touched on it. You want everyone to know it, but be a little bit more specific. Like, how do you actually communicate that?
So, I mean, it goes back to, as I said, if it's our number one objective that everybody in the organization knows what our objective and key results are, right? So the objectives is sort of what you want to do and the key results of what happens when you get there.
Sure.
And then there's another part to this, which is sort of the KPIs and the monitoring of that, right? So,
Right.
so to get more granular into that, the for people, the OKR framework for us is, and we've been using the OKR framework now for years. Everybody in the organization not only knows ours, but
They know theirs.
they
Yeah.
know theirs, right? So we take them down. So, I have mine and, my executive group has it, then the group down below and so on and so forth. Where it gets powerful, and and it was a great question, is unlike goals that we used to write goals and put them in my book every January, hey, here are my goals. I'm going to lose 20 pounds and put them in my book, and there it is. And then next January, I open it up. OKRs are meant to be shared and
Sure.
meant to be reviewed
Right.
over and over and over again. So we do every quarterly, we do town halls, we go through our objectives, and our KPIs to make sure that we're hitting and hitting in that right path.
So on the town hall, I mean, is there like a central location? Because to some extent, aren't OKRs sort of like a bottom up type of management mechanism as well? I mean, you
Yeah.
could say, 30 Capital's objective is to open an office in Houston this year and blah blah blah. Here are the KPIs. But at the same time, isn't it like incumbent upon everybody in the company to also be setting their own, objectives that relate to overall objectives? So how do you, I guess, foster that kind of bottoms up thinking as well?
So I don't do bottoms up because that makes it a little bit harder, right? So
Got it.
that's like asking, hey, each oarsman, where are you pointing your oar, right? And that makes it a
Got it.
little bit, I think that makes it a little bit harder. I think it for us,
Yeah,
the approach has been, I set a direction of where we want to go.
sure.
Here's our goal, here's our vision. These are the three things that we really need to be good at. Now, if you break down just everybody in the office needs to know what we're doing. Well, that means that, when you have objectives, when you break down to the next group, marketing, our objective is to create collateral that is known throughout our group that people can look at. Key
Sure.
result, I can be able to walk through and ask anybody in the organization what it is. So that's the way they do it. But then as we go down to the next level, our marketing group has from that their marketing material that they're delivering, but being able to know that everyone in their group is doing it. And so
Right.
like I said, you have to sort of go down so that everybody is doing it. Everybody's objective, though, and key result, their OKRs need to tie back to where our North Star is in our primary OKRs. So that's the way that we do it. I think we're also
Interesting.
we also believe strongly in fostering professional and personal development. Uh,
Sure.
I'm actually going through, and I spend most January going through and having one-on-ones with every employee in the organization,
Right.
make sure that to understand what their professional development and professional goals are. And that also ties back into making sure that you have the right people on the bus, making sure that their OKRs are correct and accurate to what our North Star is.
Sure. And I think I would guess that having a one-on-one with everybody within an organization also helps you kind of understand the innovations that could be unlocked by hearing from the people actually doing the work, you know?
Oh, yeah.
So, Rob, this is super interesting. I want to kind of start to wrap it up here a little bit. So, what emerging technologies or trends do you think will really impact commercial real estate over the next 5 years? I know we touched on AI a little bit, but is there anything else like that you see that's interesting trend out there?
Yes, I do think, I really actually think one of the biggest trends that we're seeing and hopefully you're seeing it as well, is this understanding of getting rid of this small mindset of
Okay.
focused on what interest rates are.
Sure.
Right? And once we get past that, then it's all about return, right? I think we're just, and this happens every time you go from low rates to high rates, everybody's become so myopic on
Fixated on rates, right?
everybody's become this interest rate trader, right? Everybody's become this, and this is what the Fed's going to do, and good for you for doing that. But what are you doing about it? I've always been like, oh, interest rates are going to stay flat or they're going to go higher. Okay. Well, what do you do about that? And so I think what we're starting to see, what I think is going to be one of the biggest trends, which is going to spur the market, is people will start to do transactions when they start to put the two together. Here's my asset, here's the asset cash flow, and here's my debt, and here's debt options for me. And
Good
that's
point.
once they do that, because I think a lot of people right now are not selling properties because they feel like they're in the wrong side of the market. Okay, well, refinance it. You got to do something because I can tell you your asset management fees are not going to pay for your expenses in your shop, right? You can only hold on for so long, right?
Right.
And if you want, and unless you're doing a lot of acquisitions to get your acquisition fees, you're not going to do that. So that's the number one. I really think that people are going to really, and we started seeing it last year when, survive to 25 wasn't really, it was more like survive 25. Once people started realizing like, wait a second, I've got to do this. That's when we started seeing it. We've seen almost a 300% growth in our debt optimization business
Wow.
based
Interesting.
on the fact that people are like, wait a second, I got to do something. I can't just stick my hand in the sand and hope that rates are going to come down. So that's one, and I think that's more of not necessarily a technology, but more of a fundamental change in the market that you've got to take this opportunity, take it, and not just think about one rate, think about everything. Second one is, yes, I'll get on the AI bandwagon. AI is very powerful. If you
Sure.
look at the systems I have Gemini on my phone, I have Copilot on my Microsoft and
Of
Teams,
course.
and I use ChatGPT every day, all the time
Every day.
for almost everything I do. So,
Absolutely. So, Rob, you recently wrote a book. You're doing all kinds of stuff. Where can people learn more about you and if they want to connect with you or your organization?
yep. So obviously you can reach out to me. I'm, on at 30 Capital, Defease with Ease 30 Capital. You can reach me. I keep my, obviously LinkedIn, social media, Twitter, all of those are X, please, I encourage people to reach out and look, reach out to me. I'm actually very approachable. People don't realize it's like, I actually like to talk to the market. I like to get, challenged. I actually have a new book coming out. I won't plug it yet, but
Okay.
I've actually changed the dynamics. I've realized that writing books on real estate and real estate technology and innovation is fun. But actually, I have 4 kids and I wrote a book on adulting for them because going through this
Oh,
transition.
interesting.
Yeah, it's called Hey Dad. It's coming out. Actually, I said I wouldn't plug it, but I'm going to plug it anyways. It's coming out in the spring, just in time for graduation. But it's a book on getting kids to become independent, right? Going from
Interesting.
dependency to independency.
Well, when you get
Oh,
that book out, we'll have you back to talk about it.
there you go.
Great. Well, thank you for joining today.
Excellent. Thanks, Evan.